Okay, let's think about this for a second. What if your cash wasn't paper? What if it was just pure data? And what if the government could send money directly to a digital wallet right there on your phone? Well, that's the world we're talking about today. It's the world of central bank digital currencies, or CBDCs. And yeah, they could be the next big thing for your money.
Seriously, what if your cash was just code? Imagine your money becoming, well, programmable. A currency that comes straight from the central bank right to you. No commercial bank needed in the middle. That right there is the core idea behind a CBDC. So in this explainer, we're going to break it all down. What they are, how they're not crypto, and the huge debate raging over their benefits and their risks.
All right, so let's get right into it. What exactly is a CBDC? I know it sounds super complex, but the basic idea is actually pretty straightforward. Let's start with a simple definition. Okay, at its core, a CBDC is just an official digital version of a country's money. So think of a digital dollar or a digital euro. It's not some brand new currency. It's just a new form of the money we're already using every day. And importantly, it's issued and guaranteed by the government's central bank, the same way cash is. And this is a really, really important point. Most of the proposals out there aren't about getting rid of cash or your bank account. No way. The idea is for a CBDC to exist alongside all that stuff, just giving us a new official digital option for how we pay for things. Now, I know what you're thinking. The second you hear digital currency, your brain probably screams Bitcoin or crypto, right? But this is where we need to pump the brakes and draw a really clear line. A CBDC is a totally different beast. The biggest difference? It really all comes down to two things: control and stability. Look, a CBDC is centralized. That means it's issued and backed by a government, which helps keep its value nice and stable. Cryptocurrencies, they're the exact opposite. They're decentralized, there's no central authority, and that's why their prices go on that wild roller coaster ride. So one is an official currency, the other is a private digital asset. Big difference. So if you remember one thing, remember this. A CBDC isn't trying to tear down the traditional financial system. It's actually an evolution from within it. The whole point is to bring all the cool benefits of digital tech to the money we already know and trust.
Okay, so we've got a handle on what it is and what it isn't, but how would this thing actually work in the real world? Well, right now there are two main models everyone's looking at.
The first type is called wholesale. Now, you probably wouldn't ever touch this yourself. This is more of a behind-the-scenes thing. It's a tool for the big banks and financial institutions to settle massive payments with each other, like instantly and super securely. The best way to think about it? It's like a major upgrade to the plumbing of the whole financial system. And then you've got the retail model, and this is the one that could change your daily life. This is the digital cash we're talking about, the kind you'd keep in a digital wallet right on your phone. You could use it to buy a coffee, pay your bills in a flash, and maybe, just maybe, cut out some of those middlemen fees from banks or credit card companies. And that right there brings us to the heart of the whole debate. Because like any powerful new tech, CBDCs come with a list of amazing potential upsides and some really, really serious potential downsides. So let's get into it. The good versus the bad. Okay, the good stuff first. The potential upsides here are massive. People who are for this talk about speed. Making payments, even international ones, happen in a blink of an eye. Then there's convenience. Just imagine getting a tax refund or a stimulus check, and it just poof, appears in your digital wallet in seconds. And maybe the biggest one of all is financial inclusion. This could give millions of people without bank accounts a safe, official way to finally be part of the digital economy. But the potential downsides are just as big, and this is where it gets a little scary for some folks. The number one concern? Surveillance. A centralized system could give the government a direct look into every single thing you buy. And it goes beyond that. There's the risk of control. Could your money be frozen or even programmed with rules about what you can or can't spend it on? And that all leads to this huge fear about losing our financial freedom, where our money isn't really ours anymore, but part of a centrally controlled system. So right now, central banks all over the world are tinkering with this technology, and they are facing a truly massive task. I mean, they're not just designing a new payment system. They're trying to design the future of money itself. And really, the whole challenge boils down to one giant balancing act. How do you get all the awesome efficiency of a digital dollar without, accidentally building a tool for mass surveillance? How do you push forward with innovation while still protecting the privacy and freedom that something like physical cash gives us? Honestly, getting this balance right is everything. And that leaves us with one final big question that we all need to think about. As we hurtle towards this more digital financial future, we really have to ask ourselves, is the promise of total convenience and lightning fast speed worth giving up some of our privacy? The answer we come up with is going to shape the very nature of money for generations to come.